Mutual funds सही है. We have heard this thousands of times, but a lot of us still don't know what exactly it is and how it works. So in this video, I'll try to explain mutual funds and I'll try to keep this video as concise as possible. Suppose you want to invest some money, but you have no idea about investments or the stock market, or you just don't want to consistently track or manage your investments every other day. So you hire somebody who is experienced and skilled in this field and let them manage your money, and you pay a small commission to them in return. Now that person is consistently generating good returns for you. So you suggest your friends to let him manage their investments as well. Now this is exactly how mutual funds work. People invest in a mutual fund which then invests its investors' money into different asset classes, but majorly into equity only. There are different mutual funds for different purposes and different types of investments. Like some mutual funds invest only in equity, some mutual funds are only for debt, some mutual funds are for tax saving purposes, and some mutual funds invest in a combination of equity, debt, and gold simultaneously. There are so many types of mutual funds, and the person or the people who manage the fund, who decide what to buy and what to sell, are known as fund managers. And the commission these mutual funds charge is called expense ratio. Now there are mainly two categories of mutual funds: active mutual funds and passive mutual funds. Active mutual funds are those in which the fund manager actively buys and sells stocks to maximize the returns. So here the expertise of the fund manager is very important. Basically you are just trusting the fund manager with your money. Whereas in passive mutual funds, the fund manager just follows the index like Nifty 50 or Sensex. They don't care about returns. They just need to stick to the index. If you don't know, Nifty 50 is a group of top 50 companies in India and Sensex is a group of top 30 companies in India. So if there is any change in the index, the fund manager just makes the same change in their fund. For instance, if a company gets replaced by another company in Nifty 50, all the Nifty 50 index funds will sell all the shares of that company and buy the shares of the new company that replaced it. There are two ways to invest in a mutual fund. The first is to make a lump sum investment, which means that you just invest an amount in a mutual fund once, and generally this amount is big. The second way is to start an SIP, which means systematic investment plan. By starting an SIP, you can invest an amount of your choice into the mutual fund every month. So the amount will be debited from your bank account and it will be invested into the mutual fund every month automatically. Now if you ask what mutual funds should you invest in, I don't know. Do your own research, but I can just tell you what I do personally. So half of my investments are going into the Nifty 50 index fund and half of it is going into an active mutual fund. I believe that unless you have a good understanding of the economics and the stock market, and unless you are ready to do all the research and withdraw and reinvest your money into different mutual funds every few years, at least 50% of your investment must be in index funds. Why? Because generally an index fund is a group of the top companies of a category. So even if one or two of those companies start performing bad, they will be replaced by another company very early. Even after 20 years, the index fund will still have the top 50, top 30, top 100, top 250 or whatever companies. But in case of an active mutual fund, you don't know what will happen after 20 years if you stick to the same mutual fund for such a long time. Everything depends upon the fund managers. If you also want to learn about what the stock market is and how it works fundamentally, you can watch my previous video. You will find it somewhere here on the screen. I have tried to explain it in the simplest way possible. Also, do subscribe for more videos about the stock market, finance, business case studies, and pretty much anything interesting. Do hit the like button if you got to learn something new in this video. I'll see you in the next video.